Welcome to Barchart's series of educational webinars designed to enlighten you on a variety of investment ideas and concepts. To inform you of the features and tools Barchart provides related to these concepts and offer some traders insight to help you make a more informed investment decision. Today's subject, top 3 investment megatrends for 2025 and how to profit from the future. On the discovery of the key investment megatrends poised to influence the market in 2025 and beyond are essential to long-term portfolio success. What market trends will be the drivers for substantial growth in alpha beyond, let's say, short-term momentum and Johnny-come-lately fads. Now, there are identified mega trends that are currently in place and will continue to impact markets for years and over the next decade to come. Hello, everyone. My name is John Rowland, Barchart's Senior Market Strategist, and I'm going to reveal what I believe are 3 megatrends hiding in plain sight that will propel markets for years to come. Now, are these the only trends to drive markets? Of course not. But I believe that these trends will continue to offer growth and alpha, plus should be recessionary proof in case of the inevitable. Now, in addition, I'm going to share some techniques and tools to help you hatch out your own mega trend ideas and how Barchart can make an ease of that yeoman work. Now, before we get started, please welcome our moderator and Barchart's project director, Gene Baker. Hello, Gene, and Happy New Year.
Happy New Year, John. How are you doing?
I am doing great. I'm excited to be back at work, being back with you.
Yeah, it's off to a great new year, and it's funny, I just did a quick check. Last year, 2024, you hosted 32 of these hour-long sessions. So yeah, a lot of education for our Barchart community that you've provided, and we're looking forward to another great year ahead. I know you've got a lot of exciting topics already planned out for our users.
I do, and I'm excited too, and hopefully we'll get at least 30 plus webinars in this year.
So
I think we're planning on that. All right, so let's jump off. Are you ready to get going?
Yep, way to go. Let's go.
All right, cool. All right, just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or hold securities, commodities, or any other investments involve risk and best made on the advice of a qualified financial professional, and under no circumstances shall we be liable for any losses or damage that you or any else incurs as a result of any trading or investment activity that you or any else engages on based on information or material you receive through barchart.com and our services. Now, I will add that during the session today, we will be looking at a number of sectors, industry groups, and individual stocks. In no way should they be construed as a direct endorsement. Now, there's an importance of each viewer to do their own due diligence. I'm simply laying out a case for these trends that I'm going to present, and the evidence related to the price action of a basket of or specific stocks that are related to these trends. Now, I'm going to share some selected watch lists to help you get started. By no means will they encompass all of the potential stocks that could be influenced by these trends. And of course, our old friend, past performance is not an indication of future results. Okay. So let's start off with our first mega trend. Now, it's no surprise that I lead off with AI, that 1,000-pound gorilla that is influencing markets today. This is going to be a generational technological advancement, which is going to impact markets and our lives for years. Now, it would be obvious or too easy for me to say that I just go out there, buy NVIDIA or semiconductor chip companies and their competitors that are innovating or catching up with NVIDIA. Instead, I look at AI as a disruptor, like a large stone thrown into a still pond. And that ripple effect as AI touches multiple sectors and industries. In other words, we've gone from chips, now we're talking about data centers and infrastructure build outs, hardware and power, security software, and then eventually we're going to enter a cycle where revenue growth is led by consumer adaptation and productivity utilization. Now, keep in mind that markets are always looking forward, and yes, trends are our friends, but most lucrative investment opportunities don't necessarily come from past winners, particularly those that have had extraordinary returns, but from those that are adaptive of this disruptor or have benefited from its implementation. Okay, so we're going to look at some artificial intelligence stocks. So let's go in back to Barchart here, and there I'm under the investment page, investment ideas, and our first theme list is AI stocks. And so if I open that page up, this is going to give you a list of all publicly traded stocks and ETFs. You can find that in ETFs. We're not going to talk a lot about ETFs today, but more about the individual stocks. And these are all different AI linked stocks. Now, we know that this disruptor has been present in what we would call the large mega cap stocks, our Magnificent Seven, you might have heard, right? And if I look at this through the lens of performance, and I sort by weighted alpha, which looks at how much the stock has moved in a course of a year, but also it weights it more heavily towards most recent activity. And I do that, then you can see that you are Magnificent Seven are found in the top quartile of this list of potential AI stocks. Now, um, you know, I want to move beyond, that first big splash, and that's kind of what we're looking at here. And so what I might do is, if I'm in the AI stocks, I might look at, let's say, the performance of, let's say, the last 3 months or performance in the last month or so. And what I want to kind of do here is I want to see those stocks are starting to perform now that maybe had a low alpha or maybe even a negative alpha. And really, these are that next wave, right? The next companies that should start to benefit from the adoption of AI. So again, looking here we can see that AI, the C3 AI Inc. company, in the last 3 months is up 38%, but its weighted alpha for the last year is actually negative. So maybe what this company is now just starting to appreciate or starting to feel the effects of this next wave of generative AI. But again, I want to move beyond this. I want to move beyond this first big splash. So the first watch list I'm going to show you here is going to be called data centers. And how does a data center become active, or how is it built, or even how is it powered? So this watch list here entails many different companies that are in that process. For instance, Maztec is a company that you can see that has done very well this year. in terms of its chart performance. And this company is in the infrastructure construction of data centers. And one of their key sectors in their portfolio of uh, units is this electrical transmission. In other words, this company makes the transmission lines that connects data centers to the power grid. And so they have benefited very, very well over the last year as more and more of these data centers are being created. Another company, Quanta Services, again, this is a company that has done very well of recent. And again, this one specializes in contracting services of that transmission, right? That transmission of power. So how are our data centers being linked to the power grid? But inside of this group also is, this is a company, TSSI. And if I go to TSSI, and this is kind of a little tip for you guys as you start thinking about your own ideas and your own trends that you're recognizing, is you might discover a company that you have heard of or you found that has benefited from one of your trends. And when you go to the main overview price page of one of these companies, you will see what sectors or what ETFs those companies are involved in. And so this one is in the engineering R&D services industry group, but it's also found in what is called the sector industry concentration of service management and consulting services. So what does this company actually do? Well, this company actually plans, designs, engineers, and construct management of these particular data centers. In other words, this is an engineering company that is benefiting from all of these data centers that are being built around the world. But again, one of the nice features about Barchart is it tells you where you find a lot of these stocks. And this particular stock is found in the top 100 stocks. Now, if you're not familiar with that tool, if you go under stocks, here is top 100 stocks. And you can see that TSSI is at the top of the list. Matter of fact, this company has been at the top of the list for quite some time during this year. And you can see that here's a stock within 1 year has had almost 4,500% gains in just 1 year. Talk about the power of AI as it reflects to some of these companies. So that is a very good way to start helping you find your own potential opportunities. So, but let's go back to the data center idea. And again, I want to kind of just show you some tools here. For instance, under top performing stocks, right? Emerging trends. And I look at over the last 3 months, what has been the top performing stocks? Well, look at here. Engineering and R&D services has been the top performing industry group for the last 3 months. And if we click on that box, there's our TSSI. But let's go back to our watch list. And inside of here, we talked about Mastic and Quanta Services, but some of you might be familiar with Vistra and Constellation, which are the independent power companies that, they have some nuclear capabilities. But these are independent power companies or utility companies that are not regulated by regional power commissions. So they have definitely benefited from the instant demand for power. So where do we go from there? So we've talked about this big splash. Now we're building these data centers. Well, the next wave is going to be software. And first software we're going to think about is uh, security software, right? We don't want our data center to be hacked, but I also want to start thinking about as software moves from, AI moves from uh, security to, consumer-based objectives. For instance, booking travel or ordering food or shopping. And you're going to hear a buzzword, something called AI agents. And there are a few companies out here currently um, that are in that had that space, that AI agent space. Salesforce, ServiceNow, even eBay uh, um, has AI agents. Shopify, uh, DocuSign. These companies are employing AI agents to help their customers, their packaged software. But let's start with, if I asked, polled real quickly, name a software company that is in uh, data data software, and I think we could all agree that Palantir would be one of those software security. And again, what we do is we come down here and we can see where they are found. Notice that it is in one of the top 100 stocks, but it's in the services packages software sector group. And if I open it up again, we can look at the multiple of companies. Now, in this particular uh, industry grouping, we have a lot of software companies to look at. As a matter of fact, there's 227. So what you might do is you might screen on very particular software. In other words, AI software, computer software. Now I have a custom view that I've created for myself. It's called comparative, which shows me the industries, and then I can sort by the industries and look at which one of those software companies that I might want to be more concentrated, um, particularly on. So we're going to start thinking about um, these software companies that are going to start helping consumers adapt to AI, or are going to bring forth increased productivity. Now, the next web ripple from software for us will be cloud-based information and quantum computing. And I'm sure some of you have been well aware that these types of software companies have a lot of strong momentum. So let's go to a cloud-based um, software company. And again, this is in our services prepackaged softwares. And again, what I would be looking for in these types of scenarios is, I want to find those companies that have done well, but maybe not have done as well as the other companies that have been on the leading edge. And what I might want to see is, how their performance has been in the last 3 months, last 6 months. Um, and, then what I'm going to do is, I'm going to kind of look at, let's say, the relative strength. So let me give you a good example of that as we think about this ripple effect of software. So a lot of these data centers are going to create a lot of data, right? And then data processing. So here's a stock that I came across, Pega Systems, and they're in both the computer software industry group, but that very specific peer group of computer processing and data preparation. And there they are there. And so again, what I'm probably going to do here is, this is that wave, that second, third, fourth wave that are coming away from that initial splash. And what I'm going to do here is I'm going to look for those that have, let's say, a good performance, let's say in the last month, but I don't want to see an elevated RSI. For instance, here's one that has our RSI is in above 70%. That would be overbought. I want to find those that are now getting above 50, or maybe in the high 50s or in the low 60s as a potential candidate that I want to start seeing are going to gain on that momentum for this particular industry group. And so if I do that and I go down here, all right, let's go. I think it's all at the bottom here. Let me do this. Let's do this by performance. I think this will help me a little bit better. Where am I looking for here? Be patient with me here. Oh, here we go. Data Storage Corporation. All right, so this is what I was talking about. So yeah, weighted alpha, not too bad, relative. And in the last, month or so, this stock is feels like it's starting to move again. And if we look at this in terms of that relative strength lens, right? It's not, it's not in that overbought territory. It's still, just above 50, and it's been, kind of on the move after have a major correction, over the last 6 months. So if I go into Data Storage Corporation, I'd look to see what this company is about. Right, this is one of those clouds storage computer infrastructure companies. But this is a key buzzword I want you to start watching for when we talk about looking for software companies to invest in. And you're going to hear this a lot. There's software as a service. And the acronym on this is going to be SaaS. So you're going to hear this a lot. And this is going to be the buzzword that's going to drive a lot of investment in these different types of software customers or companies. So be aware of that over the next, we'll say, 6 months or so. So let's thread off of AI centers and data centers. And recently Microsoft CEO said that, excuse me, in a recent interview, said that they have enough chips, they just don't have enough power. So I think what we're going to talk about now is, oh, by the way, all these watch lists that I'm showing you, or these links that are in our slides, will be in the slides when this recorded session becomes available on our webpage or in YouTube. So you'll have access to them. But let's talk about the green energy revolution. And the power demand from EVs and data centers is going to double. And the growth at conservative estimates is going to represent about 9% of the total U.S. electrical generation by 2030. So we're going to look at a couple different groups in the energy space, but I want to share this chart with you. And this is how America's electricity mix could evolve over the next few years. Now, I want to start with the pink, which is nuclear, and that's where Vistra and Constellation have done very well. Nuclear is going to be limited in terms of its growth. There's not a lot of nuclear plants being built Matter of fact, it takes like decades to build a nuclear plant. But notice where the growth is going to come from. It's going to come from wind and solar, as well as gas power. In other words, natural gas. So if you are thinking about investing in energy, I want you to concentrate on wind, solar, and natural gas as those power sources that are going to help with the expansion of the grid. So let's go back to our investment page, and we have clean energy, right? Where is that power going to come from, right? Building a data center, right? Those equipping a data center is really a one-time expense, but power consumption is ongoing and is a recurring cost. So where is that power going to come from? And I just showed you that solar. Now, if we look at solar companies in this watch list, you can see that if we do it on a performance basis, a lot of solar companies have been hammered this year. But I'm telling you that the grid cannot grow, and power for data centers will need to come from solar. So I think there's opportunity in this trend, that there are going to be opportunities in the solar sector. Matter of fact, remember I showed you top performing stocks? And if I go into 1 month of recent and I look at the top 10 industry groups, solar is one of those groups. So solar is starting to get noticed again. And First Solar is one of the largest solar panel companies. And I think there's other solar companies that we could look for in our process. Now, let me go back to our investment clean energy, and let's go and do this on a performance basis. And we'll look at, alpha, weighted alpha here, and we can see that Bloom Energy, which, by the way, is a renewable energy company, right? They generate and distribute renewable energies, solar and wind, and they are based in California, where renewable energies is mandated. And Nextera is another company that is in the renewable space as well. So these companies have benefited over the last year or so, and they have had a bit of a correction. I think kind of throwing the baby out with the bathwater, as solar stocks have been underperformed. But you can see Nextera, you can see where they have a lot of their electrical plants. Again, here's Tesla. Again, Tesla is more into the battery space. So about back in May, we did a webinar on the power infrastructure, and our guest at that time told us that, yeah, wind and power are going to be important for the growth of the grid, but that we need to have battery storage. And so I want to kind of show you this company. Now, this is STEM. And again, look at our performance here. This has a super negative weighted alpha. In other words, it's telling you that this stock has been down for the past year. But look at the performance here in the last month, right? It's doubled in the last month, the last 3 months. And so if we open that up and we look at what this company does, this is an artificial intelligence company who's driven clean energy storage system. The company has advanced energy solutions that uses AI analytics to tell a customer if it should be using power from battery power, on-site generation, or off the grid. So we've just talked about on-site generation and we talked about the power grid. Let's talk about battery power. So let's go to our next watch list. which is battery power. And these are all battery power companies. Now, there are a different mix here. Some of them are in lithium, some of them are in solar generation power storage systems. Again, I'm going to go into a performance here, and let's do this by weighted alpha. And full disclosure, the top of the list here is EOS Energy Enterprises, and I do own this stock. I own it outright, and I have some call leaps in this stock. Now, if you're not familiar with this company has an innovation of looking for power storage, not in lithium, but in zinc batteries. Now, what makes the zinc story a little bit a better battery storage story is, if anybody has used a rechargeable lithium battery, you know that there's a degradation of the lithium battery. After about 100 times you've used that little AA battery, it only stores about half, right? Or it only lasts about a time. And if you think about if we were going to scale to build a lithium battery, imagine a giant ever-ready battery, for utilities, the amount of lithium that you'd have to use and the size of that battery would be the size of a house. This company has figured out that zinc battery storage can give them that scalability, but also not that degradation of recharging a battery. So I think this is a kind of a company that is poised, that the market is now just starting to recognize of a unique battery idea. Again, look at some of the other ones that are at the top of this list. Now, what I like about the battery storage idea, now I don't know if ESA is going to one that is going to be the outperformer, the one that's going to take leadership in this group, but it feels to me this is kind of like the beginning of like the NVIDIA story, right? This is going to be that next generation. And if we look at a lot of these battery companies, you look at their prices, they're very, very reasonable price companies. So I think you have to do your due diligence on this one. And again, I think there are a lot of opportunities in the battery space. So I wanted to kind of show you one other thing here. And I know I have my friend Jim Van Meerten in here is in the room because Jim sent us a question. And so under news, we have something called Chart of the Day, and Jim is in charge of the Chart of the Day. He writes an article about a different chart, and just recently, Jim wrote an article on EOS energy storage. And by the way, if we look at some of the other ones that Jim has done of recent, there's our TSSI as well. So good job, Jim, in recognizing those companies that are on the advancing ripple wave of AI technology. All right. So again, these battery companies are just getting noticed. I think they're cheap, and as more data and more solar is produced, we're going to need more batteries to help them store, right? That's the dilemma with the power grid, is that the sun doesn't always shine and the wind doesn't always blow. And so during the day, a lot of these utility companies have enough power to service these data centers during the day. It's during the nighttime or when the solar is not being created that they need to store that excess power during the daylight hours. Okay, so I've made my case, or plug, so to speak, for power. But let's shift our gears from advancing technology to advancing demographics. And let me go back to my slides here. So every day, 10,000 Americans turn 60, and by the end of this year, 42 million will become 65 years old. And 20% of the population will be 65 years or older by 2023. So this large segment of our population, this contains baby boomers and Gen X's, has continually throughout their life cycle has influenced consumer behavior and spending patterns. Now, as they reach this end of their life cycle, so to speak, they arrive with the largest concentration of wealth in history. So I think what the market has done is has recognizes services and products that are needed to sustain life, for instance, medical surgical devices. But I don't think the market has really fully taken in the consumption patterns that seniors are conducting. And I would call them more of our quality of lifestyle. Now, we'll talk about healthcare in a second, but I'm talking also about seniors, um, senior housing, uh, travel and leisure, this experience over material goods. Again, housing more of a comfortable, uh, assisted housing. And then finally, what we're going to talk about, and I don't want to be morbid here, but I think you're going to be very fascinated about this group, the end of the life arrangements. So let's first start with medical devices. And whoop, let's go back to Barchart. And I don't know if you're familiar with a lot of surgical medical devices, but I think two of the one that come to my mind are Boston Specific and I think it is Stryker. And I think these companies, here's a 5-year chart here. These companies and the market has been aware of this demographic shift, right? They make medical devices that help improve the quality of life of older individuals. And again, we can go into the surgical medical instruments and apparatuses. And again, in here, you can find a lot of these. And again, I think a lot of these, you can see their alphas are strong and their performances over the 52 weeks have done well. And that is really just a improvement in the case of this demographic space. Again, let's see, whereas there is Stryker. And again, if we go and look at what they do, right? They are, they make hips and joint replacements. And I don't know, I'm sure folks that have friends or relatives or in that 60 or above category you probably know somebody also who's had a hip or a knee replacement. So these companies have done really well. I want to start thinking about medical devices that are going to help improve the quality of life of, let's say, um, you know, seniors that are living longer, for instance, diabetes devices, eye care, hearing aids, and dare I even say, cosmetic surgery, right? So let's move beyond what is obvious and let's start moving into, let's say, senior living. And so these are a watch list of companies that either have senior living facilities or support senior living facilities. Again, I'm going to look at this from a performance basis, and I just want to kind of point out a couple. Again, I'm going to sort this by weighted alpha. And the one that comes to the top is this American Healthcare REIT. And if you're not familiar, this is a relatively new REIT, but they are in the medical office buildings, senior housing, skilled nursing facilities, hospitals, and healthcare related facilities. Again, based in California, where you find a lot of retirees. The other one that intrigues me is this Addis. And again, you can kind of see the stock has been trading in kind of a sideways action, but as of recent, over the last year or so, it's starting to make a move. And again, this company here is in the home care segment. Again, talk about quality life. Who doesn't have a grandparent who, as in their later years, they don't want to live in a nursing home, right? They want those services to come to them. And so here's a company that does that, right? It gives uh, uh, physical therapy, occupational therapy, speech therapy, skilled nursing, and they do it all at the individual's homes. But there are other companies in here uh, that are what I would say senior healthcare living centers, these above 50 community centers. So again, you do that due process and looking at. But let's talk about the able-bodied center. Let's be a little bit more positive here for a moment. And we talk about this generational wealth that seniors are bringing to the table, right? And I have an aunt. She's 75 years old. She's a recent widow, but you know, I just visited with her over the holidays, and she's telling me she's going to take 3 vacations this year. 2 of them are abroad. By the way, have you seen how strong the dollar is? If you go to try to book a European vacation, boy, is it cheap. My family normally has a ski vacation. We usually look at Utah and Colorado, and we went and found that we can fly the whole family to Austria and ski the Alps for a lot less than would cost us to go to, let's say, Utah or Colorado. So my aunt has 3 trips planned. She owns 2 homes. She has a winter apartment and she has a summer home. Uh, she's very active. She plays tennis 3 times a week. And the other 2 days during the week, she's in the doctor's office complaining about her knees and shoulders. She eats her breakfast and lunch at home. That's where she prepares her meals. But she dines out literally every night with her friends. And when she's on these trips and excursions, she pays for insurance that helps protect her home and her appliances. So let's look at this in terms from a performance aspect, right? American Express, right? A lot of the seniors have American Express cards. They really cater to, let's say, the more wealthier individuals. Travel Zoo. Uh, Again, if you're not familiar with this company, right? They help folks plan travel plans. Booking.com, right? I mean, you've probably heard of them. But let's sort it by weighted alpha. United Airlines, right? The largest world international carrier. Delta is the largest domestic carrier. Front Door. I'm sure you're probably not familiar with this company. Front Door is American Home Shield. That company that insures your home and your appliances to help pay for that unplanned or breakdowns of essential home systems. Um, Again, a unique story. Here's Chef's Warehouse, and if you're not familiar with this company basically is the Costco of restaurants, fine dining, and hotels, right? They provide specialty foods and products. So again, seniors are coming to this time of life and they have money to spend. So I really do believe that even if we do have a recession, which a lot of folks says we're not going to have, we're going to have this soft landing, that I think these industries are going to buck the trend because seniors have money to spend. And look at some of the other companies. We got cruises at the top here as well. So here's a demographic spending pattern. Again, this demographic is a large demographic is dictated or influence markets for many, many years as they gone through it. And now they're at this time in life where they have money to spend and they are spending it. Okay. So let's do this now. I don't want to become morbid here, but the reality of life is that eventually it comes to an end. And if we think about this demographic, and this is a watch list, which I would call the end of life arrangements. And here are a very select few companies that are in that business. Yeah, it's not an exciting business, and it's not something that we probably don't want to face the reality of mortality of our lives. But I want to just play out a very interesting scenario for you. For instance, let's look at this from a performance basis, carriage services, right? And if you're not familiar with this company, you know, this year, a stock that has been on the rise, and its profile is the leading provider of death care services and products in the United States, including funeral homes, motor vehicles, cemeteries. And so if we look at carriage services, and this is a small cap company, right? It's not a very large company. But look at the returns of this company. Now, this 1 year growth is 57%. Now, the 3 year growth is a negative because they have just had a lot of acquisitions. But this is a company that's growing, and this is some stats from just their most recent quarterly statement that they had a 27% increase in pre-needed sales. In other words, that planning for end of life. Their GAAP net income grew by 112% year over year. And they increased their guidance because they have now had 3 consecutive quarters of over $100 million in revenue. So again, you think about this in terms of those dynamics or those metrics. This is very similar to, let's say, an AI story or a technology growth story. And if you go to their website, which is really, really fascinating, this segment that they work in is a $25 billion segment, and it tells you that only about 80% of that revenue is currently unsolicited, right? And so look at their margin, their profit margin. And this is what I really like about this company is it's one of 2 publicly traded companies in this particular segment. Now, notice where they are located, where their funeral homes and cemeteries are. California, Texas, Florida, North Carolina, Tennessee. High concentration of seniors. So you have a company that's basically a monopoly in a very niche industry group. This is a small cap company. It's probably not getting a lot of notice, but actually, if you go into their investor fact sheet and you look at who the institutional investors, you will see that it's BlackRock, State Street, Vanguard, Oaktree, all of those reputable companies are institutional investment. All right, now let's go back to this list. Where is it? End of life. And I kind of want to be lighthearted here at the end of this. I put in Walmart in here, and some of you are going to say, Walmart? What's got a Walmart in here? Well, did you know that through Sam's Clubs you can order a casket? I bet you folks didn't know about that. So this is kind of just a tongue-in-cheek here at the end. All right, so let's do this. I want to talk about risks in the market for this year, but I do see to see if we can answer some of our questions here. So give me a chance here, Gene, to kind of read through some of these.
While John is reviewing the questions, I just want everybody to remember that Barchart offers multiple levels of membership. We have a free membership, and that actually unlocks a lot of the different tools in the site. We also have what we call Barchart Plus and Barchart Premier. Both of those are going to afford you the opportunity to really dig in and customize a lot of your searches and you'll be able to create multiple watch lists, create different custom views to apply to them. Like John has a performance view showing right now on his screen. So if you haven't tried a Plus or Premier membership, I really highly suggest that you do so for this next new year. Get yourself off to a good start with your trading. And if you have any questions, just contact support@barchart.com. They'll be happy to help you through that.
Thanks, Gene. So I have a new question Gary asked about my comparative view, and this is what kind of Gene is talking about. So Barchart offers these default views, and I've been spending a lot of time on the performance, but you can create, as a member, you can create custom views. And I do have one that I call the comparative. Now, I also have one that Jim Van Meerten has helped me with that he uses for his chart of the day. And what you do is you can come into your screener here and you can create a custom view based on multiple different kinds of screenings in through the custom views. Now this is for screening as well, but for custom views. So let's go back. So on down on the bottom here, you will see where it'll say create your own custom view. That's how you can do it. And you can do those elements. And so what my comparative one that I use, one of the filters that I use is in the industry that the company is in. So that was that question I think Gary asked. I see some naysayers here, that AI is like a cannabis stock. Listen, I'm telling you, AI is here to stay. It's not going away. It's just how can we decipher or find those alpha or trading opportunities based on market momentum, trends, and also the performance of. And yes, I will agree that solar stocks, a lot of them have been underpowered. But I'm going to tell you, watch that webinar that we did in May with my guest Larry Stalika on the infrastructure, and he will tell you that we cannot move forward into the next generation without significant increase in power, and solar is going to be part of that. Matter of fact, in that presentation, he talks about how many solar plants are being built across the United States. So again, I don't know which one is going to survive or which one is going to take the leadership. I just know that we cannot get to the next level of electrical demand without solar power. So Michael says that American Home Shields has been shifting their workload to AI pattern companies, American Auto Shield. So there you go. Thanks a lot, Michael. Great information. That's AI generative idea. Ashot says American Airlines is the largest carrier in the world, by the way, just to let you know. So I went in and looked at it, and it says that in terms of passengers, United is actually just a little bit ahead of American Airlines. Now, just my data might be old, but the two of them are literally relatively the same. So Robert asks, do I think small caps are out set to perform? I think small caps is going to be a very difficult segment to, encompass. I think you need to look for those small cap companies that have positive growth, positive cash flow, earnings growth. A lot of small cap companies, and again, for instance, that battery company that I mentioned, that they still have not turned a profit, so they are susceptible to capital costs. So I would be very, very particular about looking at potential small caps companies. So let's see, then we got a lot of them. And Jim, my buddy Jim Van Meerten says, will Trump affect solar and wind? I think he will, but I think, the monies that has been allocated through other acts from the previous administration is already in the works, in the pipeline. So he might eliminate some tax credits or something to that effect. But I'm telling you, Jim, again, watch that webinar that was in May on the power grid. It's not going to happen without power. Okay, so here we're at the top of the hour. A lot of great questions. If I didn't get to all your questions, send them to support@barchart.com, and we will try to help you answer those questions. All right, so let me go back to my slides. And I want to talk about some risks for 2025. So, the markets over the last 2 years, we've had double-digit growth. We have this concentration of very few stocks have really kind of taken the leadership. And the whole market has really done well because of excess liquidity. And that has really drove our earnings. That's really what drives the market is earnings. So any changes in liquidity or earnings is going to have an effect on the market. And this is going to be something that we need to watch for, and particularly in this year. I think we're entering into a year that has more risks that we've had in past years on the horizon that could trip up the market. And again, this is an importance of looking for diversification in your portfolio. You don't want to put all your eggs in one basket. But I do believe that power generation and an aging population aren't going away. And I do think that those will be more recessionary proof. But let's talk about what those risks could be, or that change in liquidity. So taxes, either real or hidden. Yes, this administration says they're going to try to cut taxes, but there's no guarantee that that's going to get pushed through Congress. But many states and many municipalities have a balanced budget amendments or agendas, and many of the states that have recently have experienced some natural disasters, floods, hurricanes, wildfires. Those states, and I live in North Carolina, we're already hearing that our taxes are going to go up because they have to rebuild a lot of this infrastructure. Energy and electricity, we just talked about the demand for energy is going up. It's going up by 10% in the next 5 years. Well, rising demand means rising prices. And insurance and healthcare are always things that death and taxes, so to speak. But those are things that are continuing to increase. So if the consumer has to deal with rising taxes, higher electrical costs, and rising insurance and healthcare, that just means there's less money in their paycheck for investing or that liquidity. There are sectors in California and in Florida homeowners whose electric and insurance bills are more than their mortgage. That is absurd. Employment. We see a sudden rise in unemployment. Over the last 4 years, the government has been one of the largest employers. The largest sector has been the hospitality and travel sector. There's your demographic influence. But we have seen over the last year and a half, a contraction of new job openings. 2 or 3 years ago, there was 2 to 3 jobs for everybody who was on the employment line. That number has shrunk, and that could be a headwind for the market. And then recession deflation. I know that this might not be a popular thought, but what catalyst could constrict the growth? Well, monetary policy, right? The Fed has been lowering the short-term rates. What if interest rates or inflation is sticky, right? Persistent. There is a very small chance right now, but there's a lot of talk about economists that says that by the end of the year, if inflation does not come down, then the Fed will start raising rates again. What do you think the market will think about that? Fiscal challenges, right? We're coming up against our debt ceiling, right? We have to pass a new debt ceiling. What if conservative Republicans who want the government to be more fiscally responsible, stamp their feet, and we don't, we got a government shutdown for a few weeks or a month. Global economic slowdowns. Why is our stock market rip roaring? Well, we have one of the strongest economies in the global, in the world. Well, many other economies, G8 economies are not doing well, and are in global slowdowns. What if that contagion spills over into our, especially if we have tariffs, right? That could restrict global trade, globalization, deglobalization, asset bubbles, home assets, or so look at some of the recent asset bubbles, for instance, potentially crypto or meme stocks, right? If one of those implodes, what would happen? And then again, geopolitical risks. And then market mechanics. This concentration of these mega cap stocks weighting in the broader indexes are attracting a lion's share of passive investment allocation. So there's two risks here. First is as these stocks get bigger, as the Nvidias and the Apples of the world become trillion, 2 trillion, 3 trillion, 5 trillion, right? They're going to take a larger lion's share of passive investment. That means less investment in these secondary markets, these kind of markets that we just looked at, right? You look at the NASDAQ, the Qs, the top 10 weightings inside of the Qs represents 50% of, or greater than 50% of the Qs. So the other side of that risk is, what if one of these mega cap companies stubs their toes, or a couple of them stubs their toes? The benefit of an ETF is that we disperse risk over many stocks, but if you have a large concentration in a very few stocks, then the ETF's purpose of risk management of single stock risk actually comes accelerated. So if one of these mega caps, tumbles or has, a bad quarter or multiple quarters, that could be a huge headwind to the market as the broader indexes fall. Now, it doesn't mean that there might still be opportunities in active investing, but the average home investor who sees the stock market going down because the indexes are going down, that's going to probably make them a little cautious about investing. Okay. I hope you guys enjoyed today's session. Again, the final takeaway is that in the coming year, market momentum, AI innovation, mega cap leadership will likely remain the drivers for the broader indexes, and beyond these, transformation of trends like generative AI, green energy adoption and procurement, as well as a shifting population demographics, presents a very significant opportunity for capital growth and alpha generation. And these catalysts could unlock value despite the headwinds from elevated valuations, decelerating earnings growth, and recession risks. Okay, so I hope you guys enjoy today's session. Again, as Gene says, here in our slides, there are those those watch lists that I showed. And again, what I would encourage you is, if you're not a subscribed member, take advantage of our you can take advantage of our premier package, which you can try out for a 30-day process. So I look for that opportunity. Okay, Gene, that's our first one of the year. I hope folks like that one. Next week, we're going to talk about, trading volume. We're going to look at Volume, I believe volume is a very important technical indicator, but we're going to look at some very specific technical analysis tools that are based on volume. And we're going to show you how you can apply that to your technical analysis. Okay, until next time, folks, be safe out there, the best of health, manage your risk, and the good of all trading.